a.m. Chicago time, 9:08 Eastern on Tuesday, the 14th of July, 2015. Sorry about the delay. I'm working off of a temporary setup, off a laptop with three monitors, and I think it's a little bit too much for this laptop to handle. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Lots of news overnight. I'm trying to cut back on how much news I cover, but I think it's important as part of your morning bite on the way into trading to know what's going on. Generally, the European markets are mixed following the gains from yesterday. We have parliamentary votes related to Greece later. Asian equity markets also traded mixed. Gold is lower, oil is lower after the Iran nuclear agreement. The US dollar is lower versus the pound, lower versus the yen, and lower versus the euro. The P5+1 powers have come to an agreement for a roadmap for a nuclear agreement with Iran. Iran sanctions will remain in effect until December 2015. For the UN monitors report, the sanctions will not be lifted immediately. Iran has to meet certain requirements first. That's a big deal for energy traders. Greece's Prime Minister Tsipras is said to consider resigning following the vote in Greek Parliament on Wednesday regarding the creditor reform package. He's getting a lot of resistance from legislators with regards to what he agreed to with the Eurogroup. This morning, German July zoo current situation survey came in strong, 63.9 versus 60. Expectations survey came in at 29.7 versus 29, both better. JP Morgan reported at 6 a.m. Central, came in at $1.54 versus $1.45 on $24.5 billion of revenue. Wells Fargo came in at 1.03 versus 1.04, missed by a penny on 21.3 billion versus 21.5 billion in expected revenue. And then, of course, at 7:30 we had June advanced retail sales came in at negative 0.3 versus positive 0.3. This is the first negative reading since February. And then the June import price index came in at negative 0.1% versus positive 0.1%. Those of you watching these figures might have noticed a pop in the treasuries, a strong pop in the treasuries, and also a strong pop in the euro on those worse than expected prices or results. Looking ahead, we're looking for business inventories at 9 Central, 10 Eastern. U.S. business inventories expected at 0.3%. Today, there's just a lot on deck. There's been a lot on deck overnight. The Bank of England spoke. But what's left ahead of us is ECB's Mersh at 9:45 Central. Let's switch gears now and look at what the market has done. So overall, let's look at the story. We have been stuck in balance since February 13th. Those of you who have been listening a while have probably heard this. Here's February 13th right here. And we're building this profile based on these days that are outlined. And so what we've done is we've pushed through back. We never tested this 11.5 area, which is really important to test still. But we've swung back and forth, putting in new highs until recently, where we put in a lower high, broke lower, attempted higher, broke lower, and then back into the middle. So this is where we are. And then yesterday we gapped up and we pushed towards our target at 93.50. Yesterday's target was that we talked about before the trader bite got cut off was 93.50 on the upside. We'll look at that in a second. So this is where we are. We've skipped out. So we've been charting this as a separate um, auction area, a separate micro composite. We've broken out of it. So now I'm looking at this area right here for clues on a separate micro comp. Overall, if we look at what has happened yesterday, there's the gap up. So we have a gap zone now from there to there. We have gap to price open to close that is much wider. This area here is going to be monitored. Um, if the market falls below here, we're going to be looking for it to continue at least to the midpoint of the gap, if not to test the old 76, 76, 77 area and then down to 74. But overall, Hypo 1 yesterday was for an open auction, looking for responsive selling somewhere into this gap zone, and then potential chop, and then looking for it to push up and into this 93 half area as the main target. That was Hypo 1. Hypo 2 was for it to push hard on the open, which was not expected with a high probability to push towards the high on the open, take out the overnight high, and then get responsive selling back into the deeper and into the 74 area. That was Hypo 2. Overall, what we got that played out yesterday was Hypo 1, with it hitting its target at 93.50, which is a naked point of control right here. But more importantly, the 93.50 um, is the composite point of control right there. This black line here. The market's back into the most accepted price in the area. I expect coming into today, I expect it to be very choppy in here. I expect it to be very choppy in here. I expect it to fight this area a fair amount. There's remember these are accepted prices, so overall the market's expected to incite two-way trading. What's interesting about yesterday is it was an open auction out of range. You could see the opening swing is very small. Um, that a lot of times what that does is it creates a profile that looks a lot like this, where it's very thick and it's got a lot of um, energy in it, and then we would have a strong break up or down from there. OAORs create a very clear, most times they cleared a very clear risk reward situation where the target becomes the prior day's range high or low, and then the risk is the other side of the OS. And that worked out perfectly yesterday. Where I was looking for a break of the OS low and some responsive selling. I was looking for the market to look for buyers before it can confidently rise. So it did not quite do that, but overall, once it broke the OS high, it did fall back in. But we had that drive right here, you could see it pulling back and confirming the OS high before continuing higher. This was a very choppy trade throughout the day, but you can see it confirming the OS high. This is typical behavior on an open auction where generally short-term traders are in control. Again, we did push into that 93.50, so the job is accomplished. For today, the primary hypothesis here, we're opening at 2092. If we take a look at the overnight trade, completely dead. Uh, it's summer trading, it seems. I do like that we have the volatility. We still do have the China problems lingering, still have Greece lingering, but overall, the market traded pretty much in this zone until the European Open, and then it dropped, and then it traded in this zone for a bit before, so essentially what we've done overnight is break lower and then push higher and then hold this area until the advanced retail sales number, which caused a very strong reaction downwards. And you'll see that reaction also in the 10 years and the bonds. When the number came out, you see a strong spike up here. All right, so with the information from the overnight available to us, overnight inventory looks like it's fairly balanced to short, with it opening. Let's zoom in here. The market's trading right here, right now. I'm looking for, since yesterday did not quite break records on the range table. It was a fairly balanced profile yesterday. I'm looking for the market to battle this area. So I'm looking for this to attempt to go higher early on. This is my primary hypo. I'm looking for it to attempt to go higher. And then I expect it to get some response given that it's in that MCV-POC area. I expect it to get a response, and I expect it to fall back to the balance price of 89 even. This is what today is likely to bring. I expect the trade to be fairly muted, fairly choppy. So open up, chop around, attempt higher, attempt to close the gap, and then fall back through and into this area, and then most likely work this area until the close, at which point it could bounce back up or drop down. Uh, be sure to note this gap zone on your charts. I will too, with a shaded area. We did close the old gap between 83.25 to 86.25 just by opening in it yesterday. We tested it. We tested down to 84 on the gap zone. We rejected the gap zone, so that's the next area down. So a breakdown is likely to target 86.25 in the afternoon. That's hypo 1. Hypo 2 is the opposite. The market looks to drop early, test the high, and then continue to push through to the Fed high from last month at 98.75 and test the 2000 century figure. That would be hypo 2. I think it has a lower probability of playing out. Anyway, I'll leave you with that. Hope you found this useful. Tomorrow is the Trader Wisdom segment. I'll cover another important topic. But until then, keep an eye on risk and just trade the probabilities, not your emotions. Good luck.